Welcome to episode number 4 of Insurance, Investments, and All About Town podcast. Our podcast is dedicated to empowering listeners with knowledge they need to navigate home and auto insurance, healthcare insurance, make smart investment decisions, and stay informed about local happenings. We provide insights and practical advice, helping you preserve your financial future while staying connected to your community. Tune in as we break down complex topics into actionable steps for a better, more informed life. Well, welcome.
Wow.
I'm Eric Sporing, ECS Capital Investments. On my right is Lara Lavelle, Von Fire Insurance, and our special guest today, Lara Vermillion with the Blue Springs Chamber of Commerce. Welcome.
Well, thanks for having
Lara.
me.
Yeah.
We're excited to have you.
Yes. So this is our 4th episode.
It is.
It is. We've now, and I shared with you, so this is, you already know I can't ask you how many people have watched our previous episodes, but we've increased our viewership, it looks like. We're up to like 70 views now on our very first podcast, so
Good.
That's very encouraging. So I'm glad you guys can make it too. I met with big snowstorm that happened over the weekend, so it's quite the snowstorm.
Did you shovel yourself out or did you hire somebody?
Oh, no. I shoveled my way out.
Okay.
Yeah, right. Like I shoveled my way out.
I did.
Did you?
We did.
Really?
Yeah. Brian and I, we have 2 snow shovels, so we both just put on our gear and it took about an hour and a half. I figure I don't need to see the cardiologist this year. Right. So that's good. But yeah, we did. We shoveled ourselves out yesterday.
Wow. I'm too old for that.
Right.
So too old for that. So about 12, 15 years ago, back when it snowed on like May 1st, May 2nd.
Yes, I remember that.
Yeah, I do too.
Yeah.
That's why I no longer shovel snow. Got a snowblower. So yeah, me and the snowblower had a little fight, and snowblower won. So yeah. So, but no. But anyway, today I think Terry, you were going to talk a little bit about the benefits of Lavelle insurance and help me out.
I'm going to let you struggle.
Well,
That's actually way more fun.
well, I've got it written down here. So Lavelle funded and fully insured
there it is.
plans.
There you go.
Yeah.
That is what we'll cover today. So when you're talking group insurance for smaller groups, and small we are going to say is 2 to 50, right? Because at 50 there are some rule changes that maybe we'll hit at another episode. But right now we're really going to focus on what we would call small group medical benefits. So that group is, again, 2 to 50 lives. And we're going to talk about your 2 options, really, or your 2 most common options in not really plan design, but actually in a funding mechanism. And we're not talking about funding from like how we're going to pay for the benefit. We're really talking about funding what is called the claims fund.
Okay.
So let's start with fully insured, because that may be one that is a little bit easier to kind of wrap your head around. So in a fully insured plan, it's very similar to what the marketplace is. So post ACA, right? So when healthcare reform, I think that's 2014.
Yeah, something like
when healthcare reform came about, you could no longer exclude someone, right, for pre-existing conditions, and everyone had to have access to a group plan. So fully insured was the way we went.
Okay.
Fully insured meaning no underwriting. Any group is eligible. And the pricing is based on age and zip code. So it's a community-based rating and an age-based rating. When you think about that, so it's underwritten, it's based on your age, and it's based on your zip code. The insurance company never loses. Always remember that, right? They always win every single time.
kind of like the casinos.
Right,
They
just
always
like a
win.
casino,
Yeah,
right? The house always wins.
Yeah, right.
My business partner says insurance companies are not out there doing the Lord's work. I would agree. I would agree. So in that fully insured platform, you can imagine the idea, because the insurance company does not want to lose, your carrier does not want to lose, they're really charging the maximum they can possibly charge to cover their own hiney. Insurance is always a risk pool. So in that fully insured risk pool, the idea is to make sure you have enough money to pay the claims for all of those, what we are going to call possibly unhealthy people. Because it makes sense if you have a healthy group to do something different, right? If you have a healthy group, it's going to make sense to go through underwriting. So in this non-underwritten plan that everybody has access to, rates are determined by age and zip code. At the end of the year, you've paid for your insurance. The insurance carrier takes their money. Everybody's happy. Your insurance performs the same way it's going to perform in any other type of funding according to the end user or the employee. But the cost to the company sometimes is pretty darn high. You can do that, and you can do that all day long. It's very easy. They're quick. There are no questions about it. I mean, the carrier sends out a rate chart, so I could figure out your zip code and your age, and
boom, there you go.
that would be it.
There you go.
Tell you what the rate per person would be. So everybody in your organization is going to be charged a different rate for insurance, which can be frustrating for an employer, right? That's option one.
Okay.
Option two is what we're going to call level funding. Level funding is a type of self-funding, which we won't get into because that's a mechanism used for larger groups, but we're going to talk about level funding. So in a level funded product, your employees do go through underwriting, right? So it's a health questionnaire, we're going to say, typically. Sometimes it's census driven, meaning they're going to use name, date of birth, and some AI underwriting, which typically means they'll use that information to kind of figure out what prescriptions are being filled under that name with that birth date to kind of guess, right, what conditions those might be for, and then give you a rate that is unique to your employer group. It also levelizes premium for everybody. So it's no longer age-based. It's no longer, zip code based, we'll say, or community rated. It really is specific to your organization. So you're going to have an employee only rate, an employee plus spouse rate, an employee plus child or children, because one or three, it all goes into that same, or family. So family will include member, spouse, and children. And those rates are going to be set for the full year, regardless of who you hire. So new people coming in don't need to be underwritten.
Okay.
The difference in premium between that level funded option that has been underwritten and that fully insured option can be about 30% sometimes.
Wow.
It is a significant savings if you have a healthy group that's willing to go through the underwriting. Other than that, the plans themselves are going to function the same, right? We're still going to have deductible, co-insurance, and all those fun things that are really boring to everybody but me that we won't go through. The other big difference is that in level funding, so right in that fully insured, we were saying this is the premium, it all goes to the insurance company. End of story, we hope it's going to pay for everything. That's it. That's our out-of-pocket cost. In level funding, there are some fixed costs and there are some variable costs. So your fixed costs are going to be like your admin, your stop loss, some other things that I won't take the time to explain. And then there's going to be a claims fund. So every month, a portion of the premium you're paying is going into a claims fund. That claims fund is building throughout the year and then being taken from as claims are filed. So at the end of the year, in a level funded plan, if there is a surplus in that claims fund, the company is actually eligible for a portion of them back to them. So for a healthy group, it can be really advantageous. Those claims funds can be a refund check at the end of the year, or at least a portion of it that you could use to put toward next year's premiums.
Okay.
So it's really the only two ways, if you're really building a group plan, to decide how you're going to fund it. Now, fully insured works. I'm not going to tell you it doesn't. I have a lot of groups who are fully insured, and some of that is because maybe they're a small group with some health issues.
Okay.
Having a plan is better than having no plan.
Right.
Correct.
Right?
Yeah.
I can help them run through how do we determine what we should contribute, or how do we levelize this premium, because we can do some calculations to internally make it look like the premiums are levelized, right? So that your employees are paying about the same. Or, we can go level funded for those healthy groups and really try to not only save money, but possibly look at that claims fund surplus at the end of the year coming back. Now, what you will find is those fully insured rates, and I'm not going to lie, most insurance rates continue to go up, but specifically those fully insured rates continue to increase pretty rapidly. The reason is the healthy groups have all figured out they can get off of it, right? And so all that's left in that pool are your quote-unquote unhealthy groups, or those that can't qualify for an underwritten plan. And so that's it. Those are your two funding mechanisms when it comes to small group medical benefits. I think both have a place for sure in the arena. Like, there's a need for both. There is still a need for both, and I don't see that changing.
Yeah. One thing you were talking about, and then you kind of answered my question as you were talking. I had a couple questions that come to mind. Is when you get that refund right at that pool, that bucket of money at the end of the year is there. Is that always just put towards next year to reduce the premium, or does each participant get a slice of that pie? How does that work?
So that's really up to the employer.
The employer controls that part. Then if they want to apply it to next year's premiums to break it maybe a little bit lower even. Okay, so it's up to them.
Yeah.
And then you kind of hit on it, and you answered my question, but you were talking about the two different plans, right? And there's about a 30% discount, right? Why wouldn't I want to do that? And so I get it, right? You mentioned that could be some unhealthy people in that group. So if you have some unhealthy people, I would the other way is the way to go, or not necessarily.
I think every group should try for level funding first, right? Unless there's a reason, and I do come across this. I come across employers that they just don't want to take the time to do the
get underwriting.
Like, just give me what's easy, and that's fine. We can certainly do that. We can hit the easy button, and I can have that thing written in 7 days, and
off and running.
You'll start next month. We can get that done. But sometimes just the idea of underwriting steers people away. People are protective of their information.
Right.
And so anytime you have to give a social security number, answer questions about their health, there can be a little bit of hesitancy. I will say the systems have changed and modernized over the years. We used to do paper applications, right? So we've been there. We used to do, I don't know, paper job applications too. Right? So in that paper application era, you handed those over to your HR manager or the business owner or whoever, who then handed them over, and maybe you didn't want to share what was going on.
They could see that information.
Right. Well, because of HIPAA laws and some other things, typically when we are underwriting, I never use a paper app. That doesn't really exist any longer. We use third-party systems to gather that. So typically what you'll see is a private link where you're going to register. You're going to give all of your underwriting information, and then that goes directly to me to get to the carrier. So we've eliminated the HR person or the business owner or someone within the organization actually being able to see that. And it's typically just an electronic transaction. The underwriting gets simpler and simpler all the time. So simplified underwriting is something we talked about a little bit earlier. It's not what I called it, but that's when they use AI to underwrite policies. And it used to be, right, you had to have 50 people. Well, that number keeps decreasing. I have a carrier right now that as long as there are 5 belly buttons, so that could be 2 employees and 3 kids, as long as there are 5 belly buttons, which I think is silly, we can use simplified underwriting and not need applications. And that's huge. When you can simplify that process and the employer doesn't feel like they have to gather the information that maybe they don't want to know, maybe their employees don't want to divulge, it makes it a lot simpler. So there is a time and a place for fully insured. But I think everybody should at least try the level funded
First
route
and
first.
see,
Yeah, let's
yeah.
make sure you're not eligible for something better before.
Going the other route.
Yep.
Yeah. Okay.
So you mentioned there's a potential refund for the business. Is there a potential you have to pay more if the claims are larger?
There's not.
Oh, that's good.
Ah,
Yeah,
That's good.
so
good
you're
question.
not on
Good
the hook.
question.
However, when we talk about how the house never loses,
Next year you'll pay.
you got it. Yes. So you're running
One
at
way or another.
150% loss ratio.
Yeah. They're going to get that
You
back.
can expect an increase, the next year. Now, some of those can be shock claims, right? So a shock claim may be Tara shovels snow, trips on ice, and breaks her arm. Okay, that's a shock claim. We don't think that's going to happen again. So when you go to market that the next year at renewal, maybe the current carrier wants to recoup, but a new carrier might be doing some forward-looking underwriting and say,
Oh, that was
we'll
a
take a
one-time
risk
thing.
on Tara, right?
Yeah.
That was a one-time incident. Same with, childbirth.
Right.
Childbirth is still today, with as much modern technology and medicine as we have, is still a huge risk for an insurance company, right? It is still an unknown. So until that baby is delivered, man, they're taking all the money they can get. When we're post delivery, healthy baby, healthy mama, somebody new might be like, we can take this one. Yeah, and the carriers will fight for your business. Like that's probably the funnest part of my job is the negotiating at renewal, like playing one against the other. It's really similar when you walk in to buy a car, right? You need to know what you have, what you can afford, what they might be willing to offer. Same thing when I'm marketing a group renewal. Like that's the fun part, really, is seeing what I can get. You ask for absolutely ridiculous things and see what you can do for your client. So that part's fun.
I guess if like you said, you got a healthy group, probably going to be a lot of competition
exactly
for a healthy group.
Yes.
They're like, hey, we want you. That helps offset their other side of their,
You've got it.
Yeah.
Everybody wants a healthy group.
Right. Yeah. Okay. It's awesome. Good information.
Yeah.
Thank you
You're welcome.
for all that. Actually learned quite a bit. Not that I don't learn from all your other ones, but that was good. I enjoyed that one. Well, that it? You're done?
That's it. How many minutes was that one? Oh shoot, it was still kind of long.
I wasn't going to say anything.
You
So-
asked questions at
But
the
it's
end.
good information.
I know,
Okay.
right? I'm just, I wouldn't be asking questions if it wasn't good. So, well, if you're all done, then today I was going to talk about. Last month I talked about the contribution limits. So today I thought I'd talk a little bit about traditional IRAs and Roth IRAs, kind of what the difference is kind of between the two. Because I do have clients that come in and, what should I open, a Roth or a traditional IRA? So I thought I'd touch on that just for a few minutes.
That's all I left you.
That's all you left
No
me. So
choice.
yeah. But traditional IRA is great because it offers potential tax deferment. You also can get a tax break for contributing to a traditional IRA. And a Roth IRA is one that we call kind of post-tax, right? You've already paid the taxes on it up front, and we can put it away tax deferred. And so when a client comes in and talks, visits with me, and I'm thinking about, getting an IRA. I need to do something for retirement. They don't have that 401k at work. Believe it or not, there are still companies out there that don't offer 401ks.
Lots of them.
Lots of them. You
Yep.
got it. And so when they come in and visit with me, one of the things I always ask them is, one of the big things is, how's Uncle Sam treating you on taxes? Because, I get a tax refund. Well, then maybe a traditional IRA isn't, what we're looking for. Maybe a Roth IRA is a better fit at that point, because the traditional IRA, like I said, you can reduce your taxable income with a traditional IRA, so potentially reduce your tax liability. But so that's when I'm visiting with them. Those are kind of the first questions I'll ask them. With the traditional IRA, one of the things is though that if you put money into a traditional IRA and it's pre-taxed, guess what?
You put pre-tax money in
Yeah.
a traditional.
Who's the first one waiting in line when you take that money out?
You're going to pay those taxes.
Uncle Sam's the
Yeah,
first
yeah,
one in
yeah.
line.
Okay.
You know, that's the one thing about a traditional IRA, and also in a traditional IRA, when it comes time to pull that money out, it is taxed as ordinary income.
Okay.
So ordinary income, so that is like W-2 income, right? So if you're, probably at that point you're retired, right? But it could go on top of any other income that you have, and so it could throw you up into a different, tax bracket. So, and the thing about traditional IRAs as well is until you reach 59 and a half, if you pull any money out of your traditional IRA, you are taxed on it once again as ordinary income at 59 and a half. Well, anytime it's you're getting taxed as ordinary income, but at 59 and a half, if you pull money out before then, good old Uncle Sam hits you with the 10%. 10% early withdrawal penalty, right? And so those are some of the disadvantages of a traditional IRA is you could get hit with the 10% penalty for taking it out early. Now, one of the benefits of a traditional IRA, other than you being a tax deduction, right? A potential tax deduction is it's growing tax deferred as well. So the gains in there are not taxed. It's tax deferred until you pull it out. So that's one of the benefits, right? You still got to pay taxes on it, so it's really not a benefit, but you don't have to, at least don't have to pay taxes on it. Now with a Roth IRA, the good thing is it's growing tax deferred as well, but it is also when you go to pull it out, you don't pay any taxes on it. You get to bypass Uncle Sam. You get to bypass him. Now, for everything to be totally, and a lot of people don't realize this, in a Roth IRA, everybody hears, it's just tax-free. When I withdraw it out of there, it's all tax-free. Well, two things have to occur for a Roth IRA to be tax-free. Either one of you know what the two things are?
Because I too just really thought it was tax-free.
Tax-free, yeah. So for a Roth IRA to be totally tax-free, you need to have owned the Roth IRA for at least 5 years. Okay. All right. And you need to be 59 and a half. So it's kind of like the traditional IRA. You got to reach that 59 and a half. You get those two things, then you can pull everything out at that time totally tax-free. So a lot of people...
So is it a tax you pay if you pull it out prior to 59 and a half?
You get taxes and penalties, on your gains.
Really?
Yeah.
Okay,
So,
I didn't know that.
yeah, so there are penalties and,
So you're telling me I should not cash in my Roth right now? I should.
Yeah, right. So, now with that being said, but good old Uncle Sam does allow you to pull out of your Roth IRA what you've put into it. Penalty-free, tax-free, because that money was already taxed.
Okay.
That money was already taxed, and so he's like, okay, you can pull that money out. That's not a problem. But anytime any of the gains or anything, then you could be looking at taxes and penalties for that. So
Interesting.
Yep. So that's so that's like I said, when I sit down and talk to people, those are the things that I talk about. Once again, is how's Uncle Sam treating you on taxes? He's killing me.
Everybody's like, man, I just love Uncle Sam. It's my favorite uncle.
Right? It is our favorite uncle. Not, but that's always what I ask them. If they're like, I get a refund, well, then maybe a Roth IRA is the way to go. But if they say, oh no, I'm paying into Uncle Sam every year. Now look, it isn't a dollar for dollar. So if you contribute to a traditional IRA, it isn't a dollar for dollar. So if you had to pay in $3,000 last year and you put $3,000 in traditional IRA,
not gonna wash.
It's not going to wash. Exactly. But it does reduce. Would you rather pay Uncle Sam that if you owed him $3,000, here's $3,000, or at least put some in a traditional IRA and get to keep some of that $3,000 in your pocket. So, but those are just kind of some differences in how I approach when you come into my office and are looking to get started down the road to retirement. We're going to have that conversation of which one of these is a better fit for you. Yeah. So, you know me, right?
I do, but okay.
Go ahead. Do you have a question?
I do. I just have one question.
Sure.
So, obviously, in dealing with benefits, I see all sorts of things, right? So I look through benefits guides. I come across retirement plans. So maybe it's a 401k. What is a Roth 401k?
So a Roth 401k is just that. It's a 401k, right? And it is a Roth. So you are putting after-tax dollars
Okay.
into your
Rather
401k
than
Roth.
pre-tax dollars.
You got
And they're still matching
Yep.
like they would a regular
Yep.
401k.
Yep.
Okay.
Yeah.
Are there income limits
To
participating in a Roth
yes.
IRA or 401k?
Yeah, 401k there are not
Okay.
income limits, but like for instance, yes, the Roth IRA that you come to me and we open up a Roth IRA, yes, there are income limits, and it's like as a joint couple, it's like 200, and don't quote me on this, I don't have it in front of me, but it's like 220, 240, somewhere in that range. So there's phase outs, right? Up to
Okay.
that amount, you can only do a certain percentage. Anything over like 240, then you can't contribute to a Roth IRA.
Okay.
But if you remember right, when we go back to our last conversation we had with Lauren, remember we talked about you could still do a Roth.
Oh, backdoor Roth. We talked about backdoor Roth.
Yeah, right.
Okay.
And so it's legal, it's out there. The Biden administration talked about closing that loophole, but it never did happen. But so you can still do, backdoor Roth. So to answer that question, one thing you asked was like on a Roth 401k. One thing to think about is your employer, when they are doing their match, that is pre-tax dollars. So that goes into the pre-tax column. But if you're doing all after-tax into a Roth, keep in mind all your money is going in as after-tax, but your employer's match is going in pre-tax. So you're still going to have some pre-tax dollars in your 401k. It's not all going to be tax-free.
Okay. But it is safe to assume if I have we'll just use $250,000. I have $250,000 in a traditional IRA.
Yep.
And $250,000 in a Roth IRA. As long as I've waited till 59 and a half, I actually get $250,000 out of my Roth.
But there's another. What other else?
Yeah, what now?
You only did one of the two. You said,
And I've been in it for more than 5 years.
there you go. Yes.
Then
Yes.
that is the value of that is $250,000.
Right, you got it.
Whereas my traditional, it's the $250 minus taxes,
right.
at my current tax bracket, and
Correct.
that is okay. So what you're saying, okay. I could work
I don't
with
know, what am I
someone.
saying?
I'm thinking I could work with someone like you to be
Yeah.
like, hey, I want some of this,
Right.
but I don't want to jump a tax bracket.
Exactly.
What's the most I can take?
Right.
Okay, so you could help with distributions. So
exactly.
That, okay.
Yeah, because we talked about, Lauren talked a little bit about it last, but no, I don't think he did. But like at age 73, you got to start taking money out of that traditional pot.
Those are your
right?
RMDs,
Your
right?
RMD, required minimum distributions, right?
Okay.
And so that's where I can help you a little bit of, what can we take not to get to that next level. Now RMDs, you got to take it, but
Right.
there's work that we can do prior to age 73 to, maybe reduce a little bit of this
Okay.
taxable bucket. So, yeah. Okay.
Is it trivia time?
It is trivia time. It's trivia time. I always throwing out trivia
sounds
stuff. So, what year was the traditional IRA created?
1972.
Close.
Really?
Yeah, but no.
Oh.
1970.
You went the wrong way.
74?
Yeah.
Yes!
Is it really?
1974! I don't have anything
That is
for you.
math early in the morning. Just way too hard.
Sorry, I don't have a
my
prize
gosh.
for you.
Well, okay.
Yeah. How many households in the U.S. have a traditional IRA?
Oh, I wouldn't think very many. Like, I don't
So,
know.
so there's what? I don't know. Well, there's 330 million people in the United States, but that
50%?
How much?
50%?
Ooh, that's close. You're on fire this
I
morning.
guess so.
Close.
Did you guys talk before?
Yeah, I sent her the. Yeah. Yes,
No, 48%.
you're closer.
We're going the right way this
You
time.
got it. 41 million households in the United States have a traditional IRA.
41 million households.
Yeah, and think about that. Traditional IRAs, if you leave a job, right, you roll
Yes.
over a 401k,
Oh,
where
okay.
are you putting? You're putting it in a traditional IRA.
Okay.
All right, what year was the Roth IRA created?
It has to be after traditional, right? So
Yep.
traditional was 1974, 1985.
You're not in the right decade.
Really?
Yeah,
Not in the right decade. 79?
Am I in the right century?
Yeah. Right.
Yes, you are in the right
so it's in the
century.
90s.
Yeah.
So it's in the 90s.
Yes.
Yeah.
That is correct.
92?
Close. but
3?
No. You're going the right way. Yes.
7.
Yeah,
1997.
Yeah.
Wow.
1997 was when the Roth IRA was
The
created.
Roth IRA is younger than my oldest daughter.
There you go. So.
Fascinating.
Yep. And how many households have a Roth IRA?
Okay, so 41 have
70%.
traditional.
Huh?
70%.
No,
Less?
way off.
Really?
Yeah, that was way off.
10
Sorry.
million.
Huh?
10 million.
That's kind of way off the other way. So,
Oh, shoot.
yeah.
So it's not 50%, but it's it's less than 50%.
Yeah.
35.
Very close.
Oh, my gosh.
31.
31.
30,
Okay.
almost 32, 31.9 million.
So between the two, we've got about 72 million households that are
Right.
utilizing
The
either.
either or.
Okay.
Yeah. So, but there's a little information, probably worthless information that
Love
you know
it.
you don't
There's always
need.
some
So
worthless
I gotta have worthless information. So, all right. Well, that wraps up me and the IRA world. So let's shift over here to Lara Vermillion.
Yes. What questions do you have for me?
Yeah, well, we got all kinds of questions for you, but just full disclosure, Tara and I are both chamber members.
I appreciate that.
Yep. So, been a chamber member, oh gosh, I don't know.
long time.
Long time. It's been 10 plus years. I don't even know how long it's been. But really enjoy the chamber, so we thought this would be a great opportunity starting off the new year to,
appreciate
bring,
that.
Yeah, bring Lara in and tell us a little bit about,
Yeah.
the chamber and what's going on down at the chamber.
Well, and both of you probably know as much as there is to know about the chamber because Tara's on the board and you are a past chairman of our board.
That is correct.
So-
But maybe our listeners out there and want to know a little bit about the chamber because Tara and I, we speak very highly of the chamber. We're out there promoting it every day, and but maybe there's some people we've missed, right?
That's right.
So,
That's absolutely right.
But tell us a little bit. What does the chamber do? Because I laugh and you'll chuckle. I know you will. I was chairman of the board, right? And I had to do my chairman of the board speech. And what thing did I put into my speech? Maybe you don't remember this. That I said about
Well,
the
I
chamber.
missed yours.
Oh, that's right. You were
'Cause
home with COVID.
I had COVID,
That's
right.
right. I forgot that. I'm like the only chairman of the board that
I
Laura's
missed,
that
yes.
missed. Yeah. She did her speech. It was a video
I had
speech.
to do a video, yeah.
Yeah, I remember that. Yeah.
So I don't know what you said.
Well, I put in there when I first joined the chamber. I had no idea what a chamber did. Just Jane Samra with Print Graphics
Yeah, I remember
said,
Jane.
"Eric, you should join the chamber." Okay, and so I did. I had no idea. But tell us a little bit about what does the chamber
Well,
do?
and that's a common thing that happens because the chamber can be very different for different types of businesses. But essentially what we do is we try to help businesses grow. So whether that's connecting you to information that you need or connecting you to people that you need to know or even just promoting your business, we try to just meet businesses where they are and then help them grow their business.
Okay, all right. What are some of the bigger events that the chamber hosts?
Well, I would say our biggest non-dues event is our Fall Fun Festival, and that's held every year, and it's been in the community for over 50 years, and so that's a wonderful experience. You're the parade chairman, which
Yep.
we appreciate tremendously,
Yep.
and I know, Tara, you volunteer
Every
almost
year.
the whole weekend.
Yep, all weekend long.
Yes, so that's one of the biggest, but we also have a golf tournament, and we have a first responders event, and yeah, you're the chairman of that too. That's true. That's true. You just keep saying yes.
All right, you change that phone number.
Right?
She'll find you.
I
Don't worry.
know, right, yeah.
So yeah, we have a lot of fun events.
And it's interesting you brought up the Fall Fun Fest because one thing I find just being out in the community, talking to people, they don't even realize that it's the chamber that puts on the Fall Fun Fest.
Well, we do that so that we can keep our members' dues low, and because it's a good community event that gives our businesses an opportunity to showcase themselves to the community.
Yeah.
So there's several reasons we do it, but yeah, it keeps our members' dues low. It's a source of income for us.
Yeah, it's just amazing that, like I said, a lot of people don't realize that. How long has the chamber been doing the Fall Fun Fest?
I think it was in the 80s.
Has it been that long?
I think so because, well, maybe not quite that long. Maybe it was around maybe 10 years after that, 95, 96, because the president of the chamber called me when I was in Lee Summit and
Okay.
asked my opinion about whether or not the chamber should take
do
on
it.
the festival.
Yeah.
And I told her no. Because it's such a lot of work with so many volunteers. But
Yeah.
it's a good event.
Any questions or anything?
Let's just talk about the Fall Fun Fest. How many volunteers does it take to pull it off?
Hundreds.
That's
And there's
what I thought.
people that do things that I don't even know happen. And I've been at this chamber doing this festival for 15 years. And I still hear that so-and-so moved this barricade or this rock from this place and it went over here and nobody else even knows that happens. So I don't even know if it's possible to quantify, but a lot of volunteers to make that thing work.
I say what I'm always amazed at year over year is just the number of people that come together to pull it off. And also to know it really is a well-oiled machine. Like, I'm so impressed, and I guess, 30 some years into it or whatever, I mean, I'm sure it wasn't always that easy, but I mean, even when there is a small hiccup, we had an interesting one this year with a storm that came through,
yes.
right? Somehow it runs so smoothly, and it's a lot of work, but everybody has such a positive experience, whether you're in the community and you just come to have fun and hang out, and maybe your kids like to ride the rides, or you're a business owner running a booth. I hear such positive feedback from everyone involved every year.
Well, that's what we want. And I'll tell you, it's not even just chamber volunteers, because all of the booths, the not-for-profits in our community, they use those as a way to make money for their organizations. So like Timothy Lutheran, all of the people that work in that booth for the Timmy Burgers are volunteers. So it's more than just chamber volunteers. It's quite a few volunteers.
That is true. I didn't think about that.
Yeah.
It's funny that you bring up Timmy Burgers, because that has been brought up on our podcast before.
Is that right?
It
I'll have
has.
to go back and watch that.
It goes back to episode 1.
It does.
It goes back to episode 1. I didn't realize, being a chamber volunteer, you get to go behind. I didn't know that.
That was like the first thing I was told when I decided I would volunteer for the first time. They were like, there's also, and I was like, oh, okay, I'll get my Timmy burger.
It shows where I'm at on the totem pole. I'm way down. They don't tell me. They tell you those things.
You're over in a parking lot somewhere directing.
We give you cookies.
80-some floats.
Yeah, you were talking about volunteers and what it takes, and I was just thinking, of the parade itself, and we run 20 some volunteers,
at least,
just on that Saturday morning.
And that's not even VIPs. I mean, VIPs are a whole different thing.
That's exactly it. So I'm just thinking, it takes 20 some just to run the parade on a Saturday
20
morning.
Plus,
yeah,
for
exactly,
sure.
And so the 100, you probably low,
Yeah, I would say 200, easy.
Yeah.
Husbands, kids.
Yep, my kids.
Parents are all volunteered.
My daughter, even my son, but my daughter, I've been bringing up to the parade since she was little, and then she went off to college, and
we missed her.
Right? She's bummed every year that she misses it, even the golf tournament.
I was going to say, but now we usually get to see her.
Yeah.
To help us with a lot of those events still, which we appreciate.
And we'd like to see that when those volunteers come back year after year.
Yeah. You were talking about in volunteers, you were talking about, it's kind of that same one, it's like, the setup on Friday morning. I'm always there on Friday morning. I'm always helping set up the bar in the beer garden. And it's usually Cody, myself, Bill. It's the same people doing
right. And you guys know things that I don't know happens because you just know how to do it, and I just let you do it.
Yeah.
Well, and that's the other thing. Volunteers start, Tuesday or Wednesday before, and they run probably Tuesday or Wednesday after.
Yeah.
So it's not just the weekend of the event.
Yeah.
It's
and it's people don't realize, but it is January, and we will be starting up.
We will.
The Fall Fun Fest, meetings starting here. Probably was it April? I think is when we start those.
Yeah,
somewhere
depends,
right around there.
But March, April.
Yeah. Even like the golf tournament, that's coming up here. We'll start those meetings next month as well.
Yeah,
that'll be in May.
May 9th, if I remember right. So
we have five chamber staff members, and everything else we do is through volunteers.
Yeah.
That's amazing.
Yeah. And so we talked, it was great talking about the, the Fall Fun Fest. It's, probably the biggest, event that you guys do put on, but there's stuff for even just, what I want to say, the general public, right? And I say general public, but we do not the volunteer, but the first responders luncheon every year,
Yeah. And that's, the firefighters and police officers, the first responders in our community are such a vital resource and, not appreciated necessarily in the way they should be.
Right.
So this is an opportunity for anybody to nominate a first responder that has helped you, your family in any way that you've seen doing a good job. And then we'll recognize them at our April luncheon.
Yeah. Yeah.
And that's always a good luncheon, and you feel so good when you leave.
Yep.
And I'll tell you what, they don't love it because they feel like it's just their job. But to the rest of it, it's not their job.
Right.
It's a life-changing event for us.
Yeah, there's been some good awards given out at that. A couple life-saving awards, and the person they saved has come to the luncheon.
Right.
And it's kind of emotional.
It's very emotional.
To see that. And so
And
I
to
want
think they do this every day, all day long,
Right.
and they just think it's their job. But
Right.
Wow.
So I wanted to bring that one up because even though it doesn't get talked about, that's a pretty special
Yes.
event for the community.
So we'll be accepting nominations soon. So if you have somebody to nominate, please do so.
Yeah. Big event coming up here in a couple of weeks.
The banquet?
I'm over here looking at the calendar, and of course
Yeah.
that's calendar showing November on the
Which
wall
is
there, so I'm a little
not
off.
helpful.
No, it's not helpful. Not helpful at all. But it's coming up here.
Yeah,
Friday after?
It's the 23rd, I think. I wrote 24th.
24th.
I have my notes so I'd get the dates right. But yeah,
Okay.
and we will announce the business of the year and the not-for-profit of the year at that event, as well as one chairman will leave and another one will come on. So
He'll come back.
Right, come back. Yes, thankfully.
Yeah, Cody's making a comeback.
Yes.
So
Yes.
awesome. Any other kind of
Yeah, I
questions?
actually do. So I know from a business perspective what a partnership with the chamber looks like. Talk a little bit about the community at large, right? So what are the maybe just random homeowner? How can they utilize the chamber's services? Like, what is the benefit to our community for having a chamber of commerce?
Well, it's often said that the chamber does the things you think just happen in a community because we're continually working on the economy or we're working on workforce or, but an average homeowner, if they are looking for someone to do investments, someone to buy health insurance from, a plumber, anybody, that they can call the chamber, check our website, and find somebody that they can connect with to do those jobs. So that's a benefit that I think a lot of times the general public doesn't see.
I agree.
Right,
Yeah.
right.
I think that they don't realize that they too have access, and that the chamber has so much knowledge about our community and about our businesses that they're a great resource to our community members as well.
We always say it's always a chamber thing. If you don't know who to call us, because if I don't know the answer, I know somebody who does know the answer, and we can get that information hopefully provided.
Yeah, it's funny you say that because another part of my speech that I had was, I feel like all the chamber members are an extension of my business because
That's so
if
true.
if I need that healthcare insurance person, hey, I can turn to Tara to hey, Mr. Business Owner, here you go.
Yes, absolutely. Those relationships you build. I tell my staff it's like that game of memory where you turn all the cards face down, and our
yes.
job is to find the two lemons that go together
Yeah.
and match, and then make that match, and then you guys take it from there. But the amount of information that flows through that office is tremendous.
Oh, I bet.
On any given day.
Yeah.
And so just trying to recycle that and get it pushed back out is really what we do.
Yeah, and I think you guys have done a great job. I know social media. Becca does a good job down
does.
there on
Great
social
job.
media.
A great job.
Trish down there, with membership. Rose, I think she transitioned a little bit, but
Yes.
last year for the Fall Fun Fest, awesome job. I know Tiffany was just brought
Fairly
on.
new, but yeah.
Fairly new, but I see good things.
I
from
have
her as
excellent
well.
staff members,
Yeah.
and I'm so blessed.
Yeah. So, what else? Anything else you want to throw at her this morning? Yeah, that's kind of everything I had.
Did you bring the hot seat question?
Oh, I did. Did you have one?
I do.
Okay, well, you can fire away because I brought it last time. So.
Well, I want to hear yours too, so we'll do two.
Okay, we'll do two.
Okay.
We always do a hot seat question to our guest.
Okay.
So, go
I
ahead.
can handle it.
Okay.
Bring it on.
Well, I know that Lara loves Disney.
I do.
Okay.
It just makes me smile.
See? What is your favorite park? Let's go with that.
Oh, Walt Disney World. Yeah.
Walt Disney
Yeah.
World. And do you have a
Absolutely.
favorite ride?
I like Small World, even though it's the
Oh,
same
you
over
do?
and over. I like it.
It's nostalgic. There's
It is.
something really neat about. I mean, that ride's been the same for
Yes.
Yeah, it never
Since I was a
ever,
kid.
never,
It never
ever.
changed.
And really, just standing in front of the castle, that's where
Ah.
I just even if I'm in Florida, I've got to at least go to that park to just do that.
Okay.
Even if I don't ride Small World, I just want to look at the castle.
I've been to Disney World once.
Yep.
I was 34 years old.
Yep.
And as we were entering the gates, all I could do was cry. Like it was.
I
here.
can understand that.
I had
And
no
I'm-
idea it would hit me like that, but
Yes,
and we
it
had
is the most magical place on earth.
It is. And my kids didn't fight for 3 days. Nobody fought. Like we could all agree on dinner. It literally was the most magical place on earth.
Absolutely.
Yeah. So
Well,
okay, now I know.
Love
I was
it.
just curious.
I may have to invite you over to the house because right now we are doing a 2,000-piece Disney puzzle.
Oh, wow.
It's
Of
got
what?
different
I mean-
themes of
Like movies and things like that?
Beauty and the Beast.
Oh, yeah.
Donald,
That'd be
Minnie.
fun. And I love puzzles.
Yeah, so we're almost there. Almost.
Nobody at my house likes puzzles. So
Come to my house. I love puzzles.
I do too.
Oh.
Yeah.
So my daughter, myself, and my daughter's been putting in a lot of the time, but my wife and I have been over there kind of piecing stuff
Kicking it,
yeah.
you'll walk by and try to put a piece
right,
in. And
right, yeah. So it's funny you brought up the Disney.
Yeah.
So my hot seat question is this, right? We just had New Year's Eve. So I'm going to ask the question, are you a 11 o'clock Easter Standard Time person? Or do you make it all the way to midnight for Central Standard Time?
I made it to midnight,
You
believe
made
it or
it to
not.
midnight? Okay.
Yes, and even
Okay.
past that, we were playing cards with my aunt and uncle, and it was a
Okay.
fun
That's
time.
fun.
Okay,
And
yeah.
so we watched the ball drop and then talked and then went to bed.
Really?
Yes.
So what about you? Are you?
Always Eastern
Are
Standard
you
Time.
Eastern?
I'm
Are you?
Eastern. We
Yeah.
watch it when the ball actually drops in New York City. We typically do the same thing with our best friends. It's, grab the fun food, hang out, talk. We watch it go, ball drop at 11. They go home, all is well.
Yeah.
This year, they ditched us and went to Cabo.
Oh, my.
I would have ditched
And had
you
a
too.
fantastic New Year's Eve. We were both fighting Christmas colds, and I was in bed by 8:30. So I have no idea what happened. I just know I woke up the next day, and we were in 2025.
Well, I'm the same. I'm at Eastern 11 o'clock.
Yeah.
I'm in bed. I'm old, so I'm in bed at 11. Make
That's
it.
me.
But this year I did make it till midnight. We went and watched a movie, and
Okay.
then
What did you see?
We went and saw the Bob Dylan. And so if
I've
you're
heard good things about
But
it.
if you're a music person, you like music, you like that, 60s, 70s, and of course Bob Dylan was still playing, but just good movie, if you like music.
I've
So.
seen him twice.
Have you?
Yeah.
Ever seen him?
I've seen him twice.
Ah,
I saw him
jealous.
at the Missouri State Fair.
Wow.
My brother is a huge Bob Dylan fan, and so he and I went to the Missouri State Fair, and I saw him one other time at Liberty Memorial, I think.
Oh, wow.
And it was in my early 20s. Neither time did I understand a word he said, but it was really good.
Had a good time.
I did. I had a great time.
Yeah. Well, awesome. All right. Well, that I think
Wrapping
things
it
up
up.
here, wrapping it up. So, like to thank Laura for
Yeah.
coming on today.
Thank you.
And
Thanks
tell us
for having us.
Yep. Talking a little bit about the Blue Springs Chamber of Commerce. Laura. Tara
Lara.
with Von Fire. Yeah, Tara,
Very
Laura,
close.
right? Exactly. Tara with Von Fire Insurance for being here today. Real quick, Laura, if somebody did want to call you and maybe a business owner about the chamber, joining the chamber, or somebody needs some help, how could they get a hold of the chamber?
They can always call the chamber office. It's 816-229-8558. Visit our website, bluespringschamber.com, or just stop by the office.
All right. I just either call Laura.
You just stop by the office.
stop
Or text.
by.
You can text us too.
Yeah, right. So, if I have a question. So,
Yes.
how can somebody get a hold of you for level or
Fully insured.
fully insured
There you
health
go.
insurance?
Cell phone is the easiest, 816-462-8526. I'd give you my email, but it would take way too long.
We don't have enough time.
No,
So,
I'm
yeah.
out of time.
Yeah. And I'm Eric Sporing with ECS Capital Investments. I can be reached at 816-510-9067. Once again, thanks for tuning in. We will see you next month for episode 5. Take care.